In this video, I'm going to look at 12 areas where there's no tax to pay. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, then please subscribe to the channel. And if you press the like button, it helps me in the channel, so thank you for that. So I've got 12 areas where there is no tax to pay. Number one is dividends. Dividends to individuals are taxable, but UK company to UK company, that is not a tax transaction. And although why is one company paying dividends to another, it can be really useful if you've got a trading company that's making a decent amount of money and you don't want to take it out because you just pay high rate tax. If an investment company is also a shareholder in your trading company, then the dividends can go up to your investment company, don't pay any dividend tax, any high rate tax, and then it can do the investment and it can buy property. So that can be a really useful tax saving. So no tax on dividends between UK companies. Next one is relevant life policies. So within a company, if you're a director, you can have a relevant life policy. That's a life policy for yourself that's a tax deduction within the company, and the benefit, so if you die and your heirs get the money, then that's also not taxable. So that's a zero tax thing. So relevant life policies, number two. Number three and four, another similar tax savings where you can get deduction. So if you put your phone in your company's name, then there is no tax on company phones, but it does have to be in the company name, and the company can give vouchers to all its staff as long as it gives them to all its staff and within limits. So vouchers is number four. Number five is, there are restrictions around this, but the first £5,000 of savings income. So if you have a relatively low income, but you have a substantial savings income, then the first £5,000 of savings income is not subject to tax. That's in addition to your normal £12,570. So that can be helpful, the £5,000 savings allowance. Pensions, I always talk about pensions because there's quite a lot to it as well, pensions. So if you put money into pensions, that is not taxed at that time. So it's a deduction in a company, or you get a relief, so you don't pay tax when you put the money in. The income within the pension scheme is not taxable. That includes if you've got a property and you're paying rent into the pension scheme, that rent is not taxable in the pension. So a lot of people don't realise that. So that all of that is not taxable. You get your catch-free lump sum, which is a quarter or just over £250,000 of the fund. That is never taxed. If you don't take the money and you leave it to your heirs, that's not part of your estate. And there are restrictions, but it may not be taxed. So there's a whole load of not paying tax within pensions, which is probably why I get excited about them. So capital gains tax, there is an allowance, so there's an allowance. So the capital gains tax, first £6,000 is not taxed. The other thing that people don't realise is that if you die with the assets, you're never subject to capital gains tax, and that. Now that capital gains tax is much more significant because of inflation forcing us into capital gains tax, what we have to do is make sure we just want to own assets that we want to own forever, and therefore this if you own them forever, then they're never going to be subject to capital gains tax because you're never going to sell them and you're going to pass them on. The first £250,000 when you buy a house, that is not subject to stamp duty land tax, which is quite a substantial amount in the north of England anyway. You can buy a house for £250,000, and maybe not in the southeast, but here we can do that. So that can be helpful, and it's an allowance that has increased. Not everybody realises that money given to your children, that is not a tax transaction. It does become a tax transaction if you die within 7 years, or it can become, because it then sort of gets included in the assets in your estate. So if you give money to your children, that's not taxable. It may become taxable, so what you might do is get a life policy so that your children aren't going to suddenly then get a tax bill later down the line. And you might be surprised, so if you're a sort of 90-year-old, that would probably be quite problematic. And the younger they are and they're in better health, obviously the better that is. But you might be surprised if you're 60 or 70 just how cheap a life policy is. And the good news is that it's cheap because they don't expect you to die. So that's good for all of us, isn't it? So yeah, gifts to children, they're not taxable. And finally, on national insurance, so there's like two bits to national insurance as well. So with national insurance, there's a lower earnings limit. So as long as you earn over the lower earnings limit, then you're in the club for national insurance, and you get the main benefit anyway, which is that you get your year for your pension. So between 6,240, which is a lower earnings limit, and when you start paying national insurance as an employee or a self-employed person at 12,570, which is about a £6,000 band, you're in the club for national insurance and you don't pay it. So it's like a nil band, so that's no national insurance. And if you're a small employer, then you get the first £5,000 of employers' national insurance you don't pay, which for a lot of very small businesses means all of it. And it means that you may be able to pay yourself a little bit more and not pay employers' national insurance, which can help. So there you are. Those are my thoughts on where there is a nil rate tax in the tax system. It's not a completely exhaustive list, so we'll see if we can find some others later down the line. If you want to be kept up to date on tax and accounting issues, then please subscribe to the channel. And if you press the like button, it helps me in the channel, so thank you.